Yo, what's up, great people? It's your boy Mind Dialogue back on the scene. A little bit serene, but always relatively keen to all the charting schemes. So we're back again for another session. Just want to update you on what's been going on since the gold trade that we talked about last time. So the gold trade ended up panning out pretty nicely. So I was up a little over 5K. Didn't take that profit. I had a stop loss sitting down low or down bottom at around $1,600 to $1,800. I wanted to see if it was going to go up to, I think I had it at a pretty high profit target for one contract. I wanted to see if it was going to get to the 10,000 plus. It didn't end up doing it on that round. And so it went down and I got stopped or taken out of the trade because price action went against me. But I ended with profit nonetheless, which is a good thing. So I still ended with $1,600 to $1,800. I ended up getting in the trade again because I just didn't feel like we were done. I think we still wanted to go up top close to the trend line that I have above. I'll go through like all of the charting and analysis and things like that so you can be able to see. But I jumped back in the trade. I was, up a couple hundred, down a couple hundred at different points. This is not the trade that I'm in right now. This is a whole nother trade that I entered again. But what happened earlier today, which is July 16, 2025, is I checked the market real quick. Something happened in the market. I'm not sure what, but it looked like the S&P or SPY, which is SPY, fell down a good amount from where we were at. I think I saw some highs up at 622, if I'm not mistaken, and then we got as low as 618. So as a result, gold shot up, and when I looked at my contract, I was up over 10K. And so, that was my goal. Even though I didn't have the profit target set, when I looked at it, we ran up there. So I took the profit and got out that trade with a win. And then I got back in the trade again just because I think we're still trying to address those efficiencies up top. So that's where we currently are right now. I am yet again down on the trade that I just got in probably like an hour ago or a little less. And I'm just going to walk you through just a couple things that I noticed and that I'm looking at and try to share some key things to reiterate and remind you about candle anatomy, some efficiencies, and kind of where we are in the bigger picture, but also the smaller context of things. So right now, what you see on the screen, so I'm gonna take my orders off so my screen isn't as busy looking. So right now I'm down close to $1,200 on the trade right now. I got a stop loss sitting below an inversion fair value gap or a bearish fair value gap. I say it's inversion because I feel like there's a high probability we'll come and tap down inside of it and use it as fuel to go up. Right? So let me just get things situated and let you know what's going on. So I'm gonna take the orders off for right now. So right now what you see is this black trend line that you see below. This is that same super important trend line that is responsible for us being up here at all-time highs. So we already got two hits at the top, the trend line up top that I'm watching. That's pretty important. So let me just mark out the second hit. Do the top orange as well. So we hit the top trend line twice. That's a bigger trend line because the last time we hit it to get all-time highs was back on the 22nd of April, 2025. It looks like. And so we hit it again the 15th of June, so about a month ago, and then came down, tagged the bottom trend line a couple times, and this is where we currently are right now. So essentially what's going on, we are just trekking along and we're going closer and closer inside of this wedge here, right? You see this little orange circle here? So where the two trend lines converge or cross one another, I just put a circle there. That's and also struck a horizontal line through it because it's pretty important to me. I highlight this green rectangular area extending to the right is a bullish fair value gap right here that was at the end of the move and what led us into the second time we hit the trend line, allowing us to create our reference point, right? Because we need 2 points to create reference for a trend line or array or whatever kind of trend line we're looking at that we think is of significance. So I'm going to draw the bullish fair value gap for you again so you can see and understand what it means. It just essentially is an area of value that, because we're lower than it right now in terms of price action, like the price is currently down here at 33.53. I believe we want to go back up into and dig into this some more, probably closer up here to the trend line for one more hit. But I could be wrong because we might be losing steam. We hit a nice high right here. Change this color. We hit a nice high right there. And then we hit another one right here. And then we just made the one right here that I took profit off of up where these highs are. That's where I took the 10,000 plus profit from. So that's where we currently are right now. And even though these are the bigger trend lines up here, these and down here, the black ones, I'll use a trend line, kind of like segment line, to create another trend line that I see, which is right here. And so you can see we're really digging inside of this current wedge right here. And so we're either going to pop out of it to take off to go up top, or we're going to break down and go below to either address a trend line, again, or lose it and go even lower. So I'm watching that right now. But back to this bullish fair value gap. So a bullish fair value gap is an area of value that we're going to address at some point in the future again. Okay? We've only addressed a piece of it. So this high right here, right? This high kind of digs into it a little bit right here. But other than that, we haven't dug into it. So it's a lot of value there. And then there's some other inefficiencies sitting up here that we'll talk about shortly. And before we start getting into the details of this stuff, remember to like, share, subscribe, share this with someone you know that it could potentially be helpful for. If you want to donate to my Cash App, it is # Dialogue. If you want to send me an email just to set up like a private session, it is minddialogue.business@gmail.com. We could do that. I do have like free consultations at first, and depending on what you do, we can discuss how to proceed from there. Please comment, share questions, share feedback. I love to hear from you and some of the things that you're looking at in terms of assets, or you can share some different tickers that you want me to look into, even if you're just investing. If you're more long-term investing, you want to see where to, let's say, add more shares to your position, or maybe good areas to take profit at, I can help you with figuring that out as well. All right, so this bullish fair value gap, let me take off some of this stuff so we can get a little clean here. So the bullish fair value gap is basically takes place in this heavy bullish green volume candle here, where within this 4-hour green candle, the bulk of trading that took place was buying. And if we remember anything about the anatomy of a candle, right? A candle, well, at least this green candle, since we're referencing that, if you remember, it starts at the bottom of the body, right? Goes and makes a low. That's where you have the wick right there. That's its low. Then from the low, they buy it all the way up, all the way up, all the way up to its high. And then it closes at the top of the body. Oopsie, I messed this. Let me redo this real quick. So we got this, this, and this. So you got on a green candle where there's more buying or upward movement. Before the upward movement, it got to open here. They sell it down here. They buy it up all the way here, and then they sell it down again to close at the top of the body. So in essence, if you're looking at it in real time, the way that it looks is actually, right? So the way that it looks in real time, let me get this proper. The way it looks in real time is like this. So it opens at the bottom, and then they sell down, sell down, sell down to make the slow. Now, as it's doing this in real time, all we see is from this open to the sell down, and it's actually red at this point, right? Because it looks like we're selling. Looks like we're selling. So not only are we lower than where we opened, we're also lower than where the previous candle closed right here. So now this looks red right here. Now, once it makes this low here, and this candle looks red, they buy. At this point, when we cross back over where we opened, they leave that wick there, and then this thing goes green now, because now we're above where it closed and buying is coming in strong. So it's green, 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 green. Look, it looks like a full body candle like that with just the wick at the bottom at this point where we make this high. But then they sell it down once it makes the high, and then it leaves the wick up top. And that's how you're left with the green body here, and a wick here, and a wick there. And that's how the candle behaves. For the next candle, for that red candle that comes after it, instead of the bottom, we open at the top of the body. They buy. Actually, let me change this because it looks like I'm referencing the green candle. So let's do that again. So we open at the top of the body, of the red body. I don't know why this thing is going over here, but nonetheless, they buy, right? Make a high, then they sell, make the low, and then they buy, close at the bottom of the body of the candle. So this is how it looks again in real time as the candle is forming. We open at the top of the red body, right? So in real time, this actually looks green because we opened and then breached this close, which is right here, and we're above where we opened on the red. So now this is green because it's buying, 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 buying. So right here at this point, this hasn't even happened here. So the body is not even there yet. And the wick down here is not there yet. All we see is basically a full body green candle as it goes to make the high. You're like, man, this thing is bullish. We got a lot of buying pressure. Let's jump in for this trade. Not so quick. Because then once it hits that high, they sell it, sell it, sell it, sell it, sell it, sell it, sell it down, sell it down. We cross and break below where it opened, and we're below where the previous candle closed. Now we're red. So that's what makes this turn red now. Now we get the body that's left there. So you see that? The body is there, the same shaded area, like from top to bottom. You see the area of the rectangle I drew. That area is also shaded. So that's what happened. This wick is left. Only thing is red now is this body thus far. But then we go red, 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 red. So now it looks like things are really changing for the bad. And all this is red. So it looks like it's just a wick up top and a red body down bottom. But then once it hits the low, they buy, they buy, they buy, they buy, they buy. And at the end of that 4 hours, we close there. And it's left with this little spin top type of candle where the body is a little below the halfway point of this entire range. So the entire range of the candle is this, essentially. This is the whole range of that particular candle. But the important or the significant portion of trading is done within this little volume area or the body area of this candle. All right. So I just wanted to help you see that in terms of the anatomy of how candles operate. And all of that took place, all of these candles each represent 4 hours of trading. So in that sequence, for a green candle, we open at the bottom of the body, we go and make a low. They then go and run to go make highs, and then they come down to close at the top of the body. And then for red candles, they open at the top of the body, they run to make highs, they sell it all the way down to make lows, and then they buy it back up to then close at the bottom of the body. And that's what's happened there. So back to this bullish fair value gap. So the bullish fair value gap, that the gap area takes place within this bullish green strong body volume candle right here, where the bulk of trading and investing that took place was mostly buys. And so it takes it's created by the high of this first candle right here. So let's do this. Let's see if we can get some text. We're gonna let's do 1, and let's make this black. I love the color black. So let's do 1. I hate when this thing is all, let me see what I could do here. I don't like how this thing is moving. Let's do background border. What's the visibility? No, it's not really gonna do anything. All right, so 1. Oh no, it's not gonna. So the high of that candle, 1. Then you got, let's clone this. You got, this is going to be 2. So you got the high of this candle right here, which is right here and created from this top wick. Boom. So the high of that one candle, you got the body or the middle candle too. And then you have the third candle. Come on, you son of a gun. And then, there we go. Then we're gonna clone this again, and then you got the high of the third candle, and that's 3. Oops, thought I did 3. What happened? There we go. All right, so you got 1, 2, 3. The low of the third candle, which is right here, boom, and the high of the first candle, which is the other blue line. So that gap, that area here is the fair value. And you can create it by going like this, basically, where those lines end. And we're going to make this green, and we'll extend it to the right. Boom. So that's your bullish fair value gap, and it takes place at the end of the move. So this was actually real slick of them to do this, because a bullish fair value gap is not supposed to take place at the end of a move, right? Because traditionally or typically, price is supposed to go down into a bullish fair value gap, get support or balance out in this inefficient area, and then pop back up. They did it at the end of the move to trick people. So as it digs down in here, for people who got into the trade to go up, if they didn't get out here by the time we hit this trend line, it was a wrap for them. They were going to lose money, because look what happened after. Phew, sold them down all the way back to the bottom of the fair value gap, the bullish fair value gap. But look, now they're rejecting off of the trend line and inside of the bullish fair value gap, where they're supposed to be bouncing inside of to go up. But now they're wicking. So they're trying to get all that value, wick. So they bought up, sold it down. Bought up, sold it down. Reject off the trend line twice. Bought up, sold it. So look at that. All that buying up, that's all them trying to get all that value in there. They're just painting it, right? And then once they get enough liquidity and people get trapped in these plays, boom, pulled it down on them. If you're going up, you're losing money. You need to take profit here. If you didn't, you're losing money if you're in the right direction. Then they pull it back up again. Let's get it one more time. Actually, let's get it one, and let's get it twice. Boom, sold it down hard after that. And then we haven't come up to that area again since then, right? So we hit the trend line for the second time up top. And then they sent down heavy to that bottom, very important trend line that we created, and that goes way back in the past and is responsible for sending us up to the all-time highs we made back in April, towards the end of April, right? And now we're bouncing on the bottom trend line. So we're entering this bigger wedge or sideways triangle in the corner. We're going over here, and then we're in this smaller wedge. So as we get deeper into the corner, or they might not want to take that long, they're going to pop out, or they're going to the top, or pop out and drop down to the bottom. So that's what's going on right now. So that's a bullish fair value gap. A bearish fair value gap is opposite. So what's interesting is they can use the bullish fair value gap as support to dig down into to go up, and they could use it as resistance as they go up into it and reject, right? It just depends on the context. So if you had this trend line up here, well, you didn't know that trend line was going to be there because you only had one reference point, right? This is the only reference point because we only went to hit all-time highs once, and then we went up again, didn't get as high, we're losing steam. That created the reference point. But once this 4 hour ends, right? So once this candle's done that hit the trend line, that's our reference point. So we create that reference point, right? And now we're looking to see if it wants to come back up in here, get all this value, because there's a bunch of value in here still. They got it a couple times here, but they really need to dig into it some more. But you got to remember, we're close to those all-time high levels. So they want to get more liquidity if we're going to like truly go back down. So we'll see what happens, right? And then we got the smaller trend line down here, or that created this wedge between the bottom trend line, and we've wicked and hit this a few different times. And look at this nice, beautiful, heavy move we got. So there is boom, boom. So there's some consolidation here going down, right? You can get some nice quick moves or scalps as they call it, but you really want to wait for this right here. This is the key move. And how do we know this is when we should enter? We could have entered over here, but if you don't have the capital and time, you're going to get shaken out of this play once they do this. Whoop. Went up, made that high. They're getting all of these people here that entered here, right? But there's something key that we'll learn down the road as to why them coming here in particular, hitting here, to send us down so nicely to the bottom trend line, and what could help us determine that. A couple things I could tell you off rip is we already seen over here that they didn't want to go up, because look at all this selling as they dig into the bottom of the bullish fair value gap that they should be digging down into or bouncing into to go up, right? So we know they don't want to go up. But if you look at the trend line in concert with the bullish fair value gap, you see we have like another triangle that we learned from before. Remember I told you before that key things are happening with these right triangles, or triangles that have at least one angle that measures 90 degrees. Look at this. I'll change this color. Look, you're going to start noticing this. And then you have your right angles right here. And look what happens. So look at this. Just manipulation and wicking up into that right angle. And then you get one last hit as they wick above the right angle, or that perpendicular from the base. And this side over here, this perpendicular connection, boom, send it down. Crazy. So what probably happened is, now we know they digged into the bullish fair value gap, right? But what also probably happened is there are some other inefficiencies that they dug into, right? Like I could see like a super small bearish fair volume imbalance, right? Which is this little gap area right here from one sell candle to the next. You see this here? We can make a little space in here like this. They went above it pretty decently, but if you don't get a body to close above that area, you can enter the trade off of that. So in real time, as the candle's going up, it looks like the body's going above it. So look, this is what it looks like in real time. Let me change the color of this. So in real time, as the candle's forming, right? Remember we talked about, you have, let me change this. Let's go green first. So in real time, as the candle's forming, right? As the candle's forming, It opened where at the bed. Let me pull this down so you can see. It opens at the top of the body of the candle. They're buying, they're buying, they're buying. This is the manipulation. Buying, 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 buying. Boom, hit the trend line at the high, right? Breaches that area. So in real time, it looks like, dang, we're gonna go up. I need to get in a play to go up. But it's all a trick. Trend line is the key there. And they're digging up into this bullish fair value gap that they already got a bunch of value in here already and sent it down, right? So if you look at in this series, the most important swing high in this series or in this sequence of trading right here is this swing high right here. Boom. Swing high, as we talked about before, is the candle that swings the highest when you think about this 1, 2, 3 series candle sequence. So this candle makes a high that's higher than the candle right directly next to it on the left and directly next to it on the right. It swings high. It's like a pendulum. It swings the highest when you look at this 3 candle series right here. And no other candle swings higher than it. This does, but it doesn't swing higher than it. This goes higher, but it's not a swing high because look, it's next to this candle that went higher. So this is the most important sequence, which comes off the context of this trend line. It also rejected the trend line. So you get a rejection here, a rejection here, a rejection here. And then the last time, boom, they hit it one last good time. It didn't even break this middle swing high right here, right? So you know you're good to go. But this particular area right here, remember, that's a volume imbalance area. It's similar to a bearish fair value gap, but it's just like a gap from one 4-hour candle to the next. And when we shrink the charts or just put it at normal looking scale, right? It just looks like a line on the 4-hour. That's how small that space is. And look what happens. They manipulate above it, makes it look like we're currently going to be going above it with a full body green candle. But guess what happens? Hits the trend line, sell it, sell it, sell it, sell it, sell it. Once we get back and cross below open, now the candle starts turning red. All right, we're going red now. Red, red, red. Let me put this here. So now we got this wick left here, and now our red body starts forming, as you see in the candle. I'm just doing it with the box, the rectangle, so that you can see. Look, red, 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 selling it. Red, 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 selling it. Red. Boom, hits the low. Buy, 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 buy. Boom, stops at the close. You get the red body area. That's in alignment with the area that I created, and that wick that's left at the bottom. You really could get your entry once it comes back down and breaches below that little small purple looking area. They come back up one last time and hit the bottom. Look at this beauty. Like, this is pure beauty. Look at this. They hit the bottom or the starting point of the bullish fair value gap from over here. And what happens after that? Boom, you get a hard sell down. Beautiful swing high here. Beautiful sell down. They look at all that selling pressure. 5 back-to-back red candles. That's 1, 2, 3, 4, 5. That's 20 hours of straight selling. Right? And then we came down, they came again, boom, sold back down. So that's kind of the sequence of what happened right there. Now, like I told you before, if you remember, this trend line, look, it was responsible for sending up to all-time highs up here, right? And look how they were slick. They were consolidating and just building up orders. Look, we're going up, so you can catch some nice plays in there. That's not the point. You can definitely win in that area, right? It's a nice move going up. But look how they just consolidated in the area, though. They're slick. They're just snailing, like crawling on it like a spider. Crawling, crawling, crawling. And then the move starts building up. You get a 1-2 tap, boom, come up. Third tap, boom. Really double tap here, but I just counted it as one. Once that third one hits, you get a net breakout move. Beautiful. All right. So we're going to get ready to wrap up. I just want to show you where I'm at in the trade right now, show you what my concerns are, what my bias is towards, or just what I think is going on. So again, I'm on the 4-hour time frame. Right. The reason I'm on the 4-hour, now I go to lower time frames, well, you know, like the 1 hour, the 15-minute, 14-minute, you know, some customized time frames that I made. But I like to see the 4-hour because it gives me like a bigger picture of where we're gonna go in the, you know, for a little bit longer term. And then we're getting inside of this wedge here. So I know a big move is coming. So if I turn my orders back on, I'm down 1,300 right now. I'm risking 2,800 to make 6,800. So, you know, that's almost 3,000 to make almost 7,000. So we're talking about a little over like a 1 to 2 type setup in terms of risk to reward. I'm risking almost 3, but I'm making almost 7. So it's not a bad risk. I like my risk to be lower, but I just believe I believe they're going up, and I don't feel like they're gonna come lower than I just don't believe they're gonna come lower than inside of this bullish this bearish fair value gap right here. I think they're gonna use it as an inversion fair value gap where they're getting support off of a down move or downward inefficiency instead of them getting support off of, like, let's say, a upward inefficiency, this bullish fair value gap right here. And so a bearish fair value gap is just the opposite of a bullish, and I'll show you really quick, and then we'll get ready to wrap up and we'll go from there. So a bearish fair value gap, here, let's see this. I'm gonna take the numbers from what I used over here. Where they at? So let's see. Boom. Let's see if I can copy all 3 of them. You know what? Never mind. I'm not gonna do all that. Let's copy. No, it's not what I want to do. Give me a moment, folks. Please be patient. Here we go. So we're gonna copy this. Let's see if it can allow us to paste it over here. No, I don't know why I put it all the way over here, but whatever. All right, so you got, let me take off the orders so you get all the actions. We got candle number 1 here. No, I'm sorry. We got candle number 1, which is that red candle right there. Let me just clone this. Let's clone this. We got candle number 2, which is this next red candle. I could have swore I changed it. There we go. And then can we clone again, or doesn't we need to do it again? And we're gonna clone again. And make this candle number 3, this red one right here. Darn it. 3. Boom. All right. So let's look at this sequence so we can see what's going on. Oh, you're trying to hide. Come over here. Why are you trying to hide right now? All right, whatever. You can hold it. Hold on. Where is my? Am I tripping? Where's my candle number one? I thought I put candle number one. There it is. Join is hiding. Jeez. All right, we'll put it right there. All right. So this is what's happening. The low of this red candle right here, the low's right here. So we got the low right here. And then we got the high of candle number 3 right there. Let me put 3 over right there. All right. So you got the high of candle number 1, this candle. I mean, the low of candle number 1 right here. This is the low. You got the body, this healthy selling volume, selling pressure candle, which the bulk of the trading and investing that took place in this 4-hour candle was mostly selling. That's why it's red. So it opens up top, goes and makes a high, sells it all the way down, and closes at the bottom. So it closed lower down here than where it opened, right? So that's selling pressure. It's losing steam, at least for the time being. So this is candle number 2, the middle one, and then you got candle number 3, the high of candle number 3. So the space between the low of 1, candle number 1, and the high of candle number 3, that space gives us a bearish fair value gap, right? And it looks like that might be where we want to ultimately come down to before getting some more fuel to go back up. And the only reason I feel like we won't come lower than probably this blue horizontal line, which was a measurement I did, and it was like the last level that should hold us up. If we're truly going to go up, we shouldn't break and close below it more than once. Now, unless they're trying to do a very hard manipulation, they could. But, so as you can see right now, we already bounced off of it twice. 1, 2, and they swept this low, or they went right here, they went lower, basically, than candle number 2. Right, and then they popped up. I sold around up here at these highs for that 10,000 plus profit, and now they're getting some reprieve. Right, so this is what I want to see. This lets me know they're getting a lot of support here. The last level that's supposed to hold us up right here. Right, I measured down here from 32.90 up to 33.89, and the 62%, or the last level that should hold us up, using this Fibonacci retracement tool, we've bounced off of it twice. So that lets me know we want to go up. And then we might come down here to rebalance in this red area, or bearish fair value gap, to then continue up and hit this trend line up top one more time, or send it even higher to get this bullish fair value gap from way, not way, but from in the past. If we lose this level, however, right, if we lose this level right here, that'll concern me, because then we might actually break the trend line. If we break and close below this trend line a couple times, let's say on the daily and even the weekly, we're going to be coming down pretty hard, in my opinion, because we've been getting support from it so long. So we'll see if gold truly wants to go up higher, or it went high, did its all-time high. It might want to come down, just because that's what SPY did before. SPY would have made its all-time highs, and then it sold off hard, right? Off of the initial all-time highs it made at 613. They sold off hard a little bit after Trump came into office. We went all the way back down to 481, and now we're back up higher than 613. So look at that. So gold might want to do the same thing, where we went and got all-time highs. A lot of people took profit, investors, traders, institutions, all the big wigs who got a lot of money. They probably took some profit, and now they're going to gradually sell off and reposition, or just rebalance their position, and probably go into something else that might be getting ready for a run up. So that range I measured, let me change this to, let's change this to orange. They bounced off of it twice, already got support off of it 2 different times. So let's see what happens. If we measure the smaller rent, like if we measure, let's see here, if I measure right here to the high, that he gets support up in here. Let me take this. Oh no, I'm gonna leave that. So we'll see what's gonna happen. When I did a previous measure in the past, I'm trying to remember what I did. I think I measured from down here actually and saw that they had manipulated. So let's see. So I measured from here to here. Ah, that's what it was. I measured from here to here. So I measured from a low of 32.50 up to 33.89. So what's that? Like a $139 move, right? Look, this 62% aligns with this blue line I had. That's why I had the blue line there. Let's make it a little bit cleaner. And look what happened. Price action manipulated below here twice. And we saw what happened in the past when we manipulated below a very key level and trend line. They popped up very hard. Look at this move. So now they're doing it again. They made a nice pop-up move. Well, before that, they came down pretty strong and they manipulated below here twice. They closed. When I say manipulation, they closed on the 4 hour. You see the red, they closed here and they closed here on 2 different 4 hour time frames. And then they popped up, got a nice aggressive move up. And now they're coming back down here, probably to rebalance to go back up. But if they lose it, then I'll be looking to probably get out of my position, or I got my stop loss down there for them to kick me out. I'm gonna put it a little bit lower, right below here, just because I'll do that. And then I'm gonna put this where I got my profit all the way up there. So that's what I'm looking at, folks. Please like, comment, subscribe. It's your boy Mind Dialogue. Let's have some dialogue, y'all. Right? If you want to learn anything, if you need clarity on something, I'll do my best to help you. But like I said, I've had years in the game. I'm actually looking to rebuild my accounts right now. I think I'm probably going to look into trading futures. I really like the concept of futures. They don't get affected the same way that options trades do in terms of theta. So if you have a really good entry model and you are confident and have high probability setups in terms of your direction, even though futures may try to stall out and play games, you're not going to lose value on your contracts, even if it sits still. So you just got to be patient and let the move pan out, set up your risk to reward ratio very nicely, and then you're good to go. So that's it, my great people. I hope y'all have a great day, blessed day. Let's get this thing and let's go out and be great. All right. Love.